Hello everyone, TGIF. How are my trading warrior brothers and sisters doing this morning? How you doing, Glenn, Patrick, Kevin, Zia, Zahir, Vamsi, Vince? Yes, sir. How's everyone doing today? Sorry about being 2 minutes late. Can you imagine what your trading life would be if this daily webinar wasn't here every day? Just think about that. So here's US dollar yen. It was a 100 pip objective scalp manifested. Okay. Yesterday S&Ps said there was still a chance of a 2-week reversal happening in the S&Ps. We're 8 handles underneath the 2433 weekly off number. So we were here yesterday, and I said if you wanted to be short, you could be short here with stops over the high. Turned out to be a windfall trade. So huge day. I don't think this is the bottom. We have confirmed lows here. Maybe this is 1, 2 with another one to follow before there's a better rally. But I can say that I believe it's now probable that the high for the summer is in. Let me get rid of these fibs. So we have our 2-week reversal. I think this, which was on the solstice, the high of the move, these were 2 failing rallies here. So we've had 2 lower highs, getting a negative week, taking out the weekly range, and the maybe next week, if that happens, would confirm it. But there's your first weekly reversal that closed underneath a 2-week off number, probably since the election. Because there have been many chances it could have done it. This week it looks like it is going to do it. Okay, everyone with me on my analysis here? US dollar yen. So this is our 3rd month we're wrapping up here, face. End of June. Been doing this webinar for 3 months. How many people in here really feel like this has been added value to their trading mission, their goals, what they're trying to create in a trading career? And I want to start out by thanking the hundreds of ForexAnalytix subscribers, that have form this symbiotic relationship with us. So, markets are to be exploited, relationships are not. So I want to thank all of our subscribers, and we really appreciate it. I don't tell people to sign up just for our good. I tell people to sign up for their good, because before I joined ForexAnalytix, I didn't have access to what Nick was thinking, or Greg. I'd have to catch, what he put out for free, which isn't, which is great work in itself, but to, every day be able to pull up Blake's work and Steve's work and Nick's work and Stelios's work is really quite an advantage to, if you want to accomplish being a good trader and have great actionable ideas to put into your trading plan. I think it's a good idea to sign up. So, I just want to start with, people call me coach, but the best coaches don't just draw X's and O's on a chalkboard like a football coach. They're also about coaching people in life and with character. And, I've been around, I've been through a few things, so, I just want to share something with you. Okay? So just imagine that our lives are like a field. Okay, you have a big field out there, and you can't plant anything yet. So you're out there, you're digging up the rocks and the dead tree stumps, and you're pulling the weeds, you're tilling the soil. Okay, so you till the soil. Someone else want to talk? Okay. And that's a time in your life when you're learning your craft, you're becoming an adult, and you're preparing the field, and maybe now you're starting to consider maybe being married or having a family. And so you want to have everyone wants a bumper crop harvest, right? I mean, you know, every farmer that plants a crop wants to have the highest yielding crop possible. So the most important decision for that is what kind of seeds are you going to plant? Okay, and I've had I understand, because I have also in my life planted seeds that did not produce a good crop. And those seeds are where you try and get something for nothing. You exploit a relationship for your benefit. And the good seeds are when you are supportive. It's not new age, that thing called The Secret, the law of attraction. It's ancient knowledge. Do unto others. So you have a choice what kind of seeds you're going to plant. And I really think that the hard work that's recognized by a lot of our subscribers that Blake and the whole team does every day deserves at least a look and a sign up today, so that you're prepared for what could be a wild summer. Everyone's saying it's not going to be, go on vacation and come back after Labor Day. You're going to miss a lot if you do that, in my humble opinion. So I want to thank all of our subscribers, people that are here. I believe this room is worth money in itself. This week was a pretty good example. Blake just dropped in. Short euro pound. Okay. All the great pattern and plays that came home in the last 3 months. How about all the guests that come here and they give their time? Of course, they're hoping to possibly attract business, but they're giving spirits. They come in here. They don't have to do it. We're not getting 10,000 YouTube views. All right. We have hundreds in here live, but on FX Street, there were times where I would do an interview and you get, over time, 50,000 views with Martin Armstrong. So I really believe we have a symbiotic relationship. You guys contribute your work. You're here every day. And your choice is what kind of seeds do you want to plant. And if you want to have a bumper crop, you plant seeds that value relationships, and you support each other. So with that all being said, Mr. Blake Morrow, hiding out from the heat, one of my favorite spots in Flagstaff, Arizona. How you doing today, my brother?
Good. I'm actually not there now. I'll be there. I'll be there this weekend. So, yeah, I'm heading out and getting the house ready for the house sitters, and yeah, I'm about ready to go leave tomorrow for the weekend, for the long weekend. So
nice.
Yeah. Nice. So I appreciate everything that you said, and just so you guys know, okay, so there's a few things that maybe Dale left out, and I'm gonna take over the charts because I want to talk about obviously some setups here. But one of the things that Dale didn't mention is that this room, this webinar that you guys are listening to, it's powered by Citrix. We pay for it. We foot the bill, in hopes that some of you guys will utilize ForexAnalytix, and that in turn helps us continue to work this community and, you know, allow for all of us to grow as a community. And so I hope that you took Dale's words to heart here. So you know, we strive to do our best and provide you up-to-date analysis. Like, I mean, I can just show you, for example, just moments ago, you know, the dollar Canadian, you know, this hammer formation that's forming here, right. You know, that after hitting a new trend low, you know, should allow the dollar Canadian to reverse back above 130. You know, but you get analysis like that that's, you know,
multiple times a day, Blake.
Of course, yeah. You know, I myself put out probably at least 10 to 12 different updates throughout the course of the day. That's not including the end of day updates that myself and Steve and Nick and Grega and Stelios do. But the intraday stuff happens while I'm sitting in front of the computer because I'm trading, obviously. And so as I'm trading, if you guys want to see, like, you want to see what I'm trading, I mean, this is like an example of, you can see I've got millions of dollars worth of exposure on right now. So you know, I'm trading quite aggressively, okay? And so as I'm trading the markets, I'm updating because I'm alerting you guys and gals of things that I'm seeing. And of course, I don't catch everything. We're a human operation here, so it's not a
robot. We're not robots.
No, we're not robots. Definitely not. And so we're going to miss some things here and there, of course. But for the most part, you know, we try to you know, just publish what we see and try to do it in a timely fashion. So this way, hopefully you guys can take advantage of it too. And most of it is like what I do anyway. Most of it is setup. So it's more of, for example, like this you know, with the Kiwi dollar. You know, I'm like, oh, you know, the Kiwi dollar is breaking highs. We are breaking this resistance, and then I, you know, posted this chart, this 4-hour candle, saying, hey, you got to be careful because we hit new highs and then we reversed. You know, and that's important information. You know, that's important information when you're trading around. You know, it's like, oh crap, you know, we just hit a new high and we're reversing here. You know, it's not like, you know, 3 hours later. You know, oh, you know, the hourly chart hit resistance and we reversed and we're down, you know, 60 pips since that reversal. We're not weathermen and analysts, except end of the day. You know, end of the day is like kind of like an update, and you know, the candlesticks can kind of foreshadow what's going to happen the next day, in my opinion, pretty effectively. But you know, our analysis that's intraday is not, you know, I call it weatherman analysis. It's not weatherman analysis. It's not like, yeah, well, today it's sunny and hot and, you know, it's, you know, 80 degrees. You know, it's not that. It's as it's breaking and as it's moving. And
it's actionable.
It is actionable.
You're right. It's not a weather report. It's going to be sunny out. It's saying, you know, there's going to be a tornado coming and we see it. You better take shelter if you're long Kiwi and consider reversing for a counter trend trade. Get to your underground shelter if you're,
or you know, or if, you know, if you're long, you know, protect your stops. You know, we make comments like that because, you know, the last thing, like the dollar Canadian is a great example. You know, we just completed a couple flag formations actually. Hold on, I actually should do this. So, you know, we completed a couple flag formations. We briefly broke through the support zone. If you're short right now and you see this, you know, you're probably covering. You know, at least you should be. But you know, how are you to, you know, if you didn't recognize that on your own, or if you were, you know, mobile, you know.
Blaker.
Yeah.
Steve. Good morning, my friend. Yesterday that was my exact warning, and you know, you weren't even listening at that point. But you know, I keep stressing very often to people that it's not by accident that we very often see the same things, because you know, we are working the markets we have an objective point of view as much as possible, because obviously you can interpret in multiple ways sometimes charts. But I told them the same thing exactly. I mean, Dale can testify to that. I told them that, listen, the party more or less is over in the USD CAD. I mean, the easy part of the move is probably done, and you should be careful now because of the exact same level you see there. So I mean, people should note that down, that it's not by accident that very often us at ForexAnalytix, just by inspecting through a different perspective, we end up more or less seeing the same setups. This is a testament that there is an objective way to look at the markets more often than not, actually.
Yeah, and go
ahead.
The
advantage, though, is, Steve, we talked about this as being, a potential event, and then it's followed up to our subscribers as, okay, here's the trigger. Okay, so yeah, they would have gotten that information in free room yesterday,
but not the time.
They wouldn't have gotten the trigger, and that's what trading is all about: being there on time with the trigger instead of coming to the party late. So that's the difference between, look, there's money. This room is worth money. Okay, just the room with all the great analysis and calls, let alone ForexAnalytix. He had hundreds of subscribers before we started the room, so that's a huge value in itself. But together, it's just the public's way of saying thank you for the free room. And you know what? The research is so good, I need to have it, because I'm not in front of my my platform all day long. I also live, and I know that wherever I go with the phone app, if I have to make adjustments, if I need to take something off or something new, a new pattern in play is coming, I'm going to know about it, because these guys are working for me when I'm out there living my life. So, I mean, it's the strongest product I've ever seen, and people that have been following me for years, they know, okay? They know what I did in LAR. They know what I've done in my history, and they also know I don't really bullshit, okay? So I say what I believe, and I mean, this is a tremendous value to have the room and your research as a package. I don't think in the FX arena, find a better place. I challenge anybody. Let me know where it is. I'd like to see it.
Appreciate that, Dale. Well, hey, with all that aside, I got a few minutes just to speak before the open here. One of the things that I know I mentioned this yesterday, and I want to talk a little bit about it today. Is this NASDAQ is trading really heavy, and in this type of environment where rates are going higher, and it's interesting that you had the Bank of England, the Bank of Japan, you had a Bank of Canada. Who's the other central banker that was there? ECB. Oh, and the ECB. All talking about raising rates as well. The market really is starting to buckle under some pressure as rates, start to rise globally. And this should be noted for stocks like, I'm going to point out the NASDAQ, but this, I want to show you that, guys. Whoops, NASDAQ composite. I don't know if I showed you guys this chart yesterday, but I want to make sure that you guys all see it. This is a monthly chart. This is a 127% extension of the NASDAQ previous .com bubble peak, the lows to the highs. That's a monthly candle. That's a shooting star for those of you that don't know what that is. And I'm gonna say that this is a,
and if I may really, Blake, if it closes a little bit lower from now, from here, it's also going to be a dark cloud cover besides the shooting star. So it's going to be a double whammy candlestick.
Well, we'd have to close the month
below the mid of the previous candle to be a dark.
I thought it was below the candle open.
No, then it would be a bearish engulfing.
No, no, well, it'd have to be the whole stick, but I'm talking about the open. I thought it was below the open, but anyway, regardless, it's a bearish setup any which way you slice it, and focusing on that, knowing that, moving forward, probably for the next several months, 1, 2, 3 months, we have to start thinking about, selling NASDAQ on rallies, because right now you got asset managers, portfolio managers that have been underperforming, but at the same time, if they're underperforming, they don't want to become more underperforming if they miss out selling, if the stock market starts to reverse. So with that being said, if we're focused on a rate rising or rising rate environment globally, and then you have, the stock market starting to roll over a little bit, we have to really start to focus on some of these emerging market currencies, commodity currencies. I'm really interested to see how commodity currencies react in this environment. I know emerging market currencies are going to be probably sold, and the euro looks so strong that I want to turn your attention to like the euro peso. The euro peso has been interesting, and let me just delete everything here. The euro Mexican peso has been really interesting, but what's really interesting about it as well is where it's holding, and the last couple of months. In a situation like this, the euro peso could be, and one of the guys that I was trading with today, and I mentioned Chi a lot because we chat a lot in the chat room, and thank you, Chi, for chatting. He's like, the carry on the euro Mexican peso is pretty high, so you don't want to, this is not a kind of trade you want to sit in it for a month. But what I'm trying to point out to you here is just that he's like the carry is pretty high, so if you're trading, you just want to make sure you time it correctly, so you're only in it for a day or two, because you carry it too long, it's going to cost you some money.
What a great name for a trader, Blake. Chi. You're kind of a revolutionary, a guerrilla warrior, which is what you have to be in the markets.
Right. Well, Chi's Asian, so he's my he's my my Chinese brother from another mother, I guess. But anyway, regardless, I think whether it's the he's smiling here, whether it's the euro Mexican peso, it's the dollar Mexican peso, which I happen to have a long position right now. We had a bullish engulfing actually in the dollar peso yesterday, but it's feeling the end of quarter flows, so it's been whipping all over the place today. You should see the intraday movements of the peso. Yeah. All over the map. You like those sound effects, but also the you start looking at the I have the Turkish lira up here. Here's the lira. Turkey's got all sorts of issues. Here's the 200-day moving average, but nice descending wedge into a 200-day moving average. This thing looks like it could ramp up pretty good. We start breaking like 355. I mean, we could really see like 370 again. There's like the U.S. dollar, South African rand, and this one, also is, and Jack is from South Africa. He's chatting away right now. But yeah, you take a chart. Looks like all these charts all look very similar. Descending wedges. The whole emerging market complex looks like, in my opinion, we could get some longer term reversals here. So and
that Euro Mex you showed, that looks like that's going to end up being the head of a Head and Shoulders top formation.
It could.
The previous.
That could be the head, but I mean, we can still rally. 21, 22. From 20. That's a big move, by the way, for the euro peso. I traded this a lot, pre and post election. So I've had plenty of experience in the euro peso, but this one could, obviously be, pretty violent, and a move up towards 21.50 or 22. You can make a whole heck of a lot of money if you're on the right side of this thing. So anyway, just some things that I wanted to point out. just ahead of the weekend. It is going to be a long weekend. I'm going to be in a rental. I'm going to see how good my internet connection is when I check in tomorrow. So I should be here on Monday. If not, I'll be mobile. If not on my computer, I'll be mobile, at least to come in and chime in through mobile and just kind of let you guys know what I'm thinking. But all in all, I want to wish you all a good. I know there's not a lot of people here on Friday because it's a long weekend. I mean, the markets are the markets are open on Monday, but Tuesday's the 4th, so this is when everybody in the United States is going to have a barbecue. A lot of people are taking Monday off, but we'll still broadcast. Dale, I don't know if do you even have somebody scheduled for Monday?
No.
You should probably have a shortened webinar on Monday, just because it's going to be, I would think, relatively slow, unless there's some sort of tape bomb over the weekend, which I doubt. But, be careful today during month end and quarter end and half year end. You're going to get a lot of wacky flows today. One last comment before I let you guys go. The DSI on the euro is at 93. That's a ridiculously high.
That's insane, yes.
Reading. It is, and so I actually shorted the euro last night. I covered it at 114. I shorted it again just a little while ago at 114.20. I covered it at like 114.13. I'm going to be targeting this thing to the downside. There's a little intraday channel here. I'll sell again at 25 and cover down here. But if we break this little intraday channel, then watch the euro, because it is very.
If it makes you feel any better, the last thrust higher is a very likely wave 5, Blake. So that also enhances the possibility of at least a deeper correction lower. So I think I think you're definitely right on the high likelihood of some kind of a reversal here in the euro. We're going to see what kind of reversal it's going to be.
This would be the 5th wave right here.
Yeah.
Yeah, okay. Well, I'm sure people are interested to hear your count. So I'm going to turn it over to you because the market is opening. You guys have a great weekend, and I'll check in with you guys on Monday for sure.
Hey, Blake, enjoy yourself up there, and in case we don't talk to you on the 4th, I want to thank you for your service to FX traders as a civilian and your service to the United States as a Marine. Thank you, buddy.
Thank you. All right, guys. Have a great one.
Bye-bye, Blake.
Okay. Hi, Steve. How are you, mate?
Hey, mate. I'm good. Besides the fact that we have like an insane heat wave that thankfully is going to recede starting on Monday. We have some very, very high temperatures at the moment. So I'm waiting for.
You have good air conditioning in Greece?
Yes, of course. I mean, otherwise.
Bills real high?
Sorry, say again?
Are your utility bills pretty high in the summer when you have heat waves like this?
Definitely.
All right.
But,
okay.
I think it's money well spent.
I've been in to stay comfortable. So you know what? Talking about heat, you said you were looking for a break to buy in the yen, and yesterday I said I thought we'd break 100 pips. So I'm curious if it got to your zone to buy it or what you're thinking here, but
I'll tell you something.
Yeah,
actually, you showed it, but you probably didn't pay so much attention to it. I'm going to do something that I very, very, very rarely do, which is look at a 1-hour chart. Okay?
Oh, okay.
And this is the USD yen. Let's maximize. Let's put a 1-hour chart up here, so it's 60 minutes.
Yeah, so it went right there.
Yeah, let's put a 60-minute chart.
You're a little soft, Steve. The volume.
Okay.
All right.
What do you see here?
Yeah.
Do you see it?
Yeah, I do.
Mm-hmm.
So at least, kind of a head and shoulders, does it project a failing rally or new highs?
We'll see. I know as a fact, though, I can tell you that much. Of course,
Yeah.
we might have a deeper correction, but let me bring the daily chart and I'm going to tell you. I know as a fact that we are actually testing currently.
That major trend line.
We are back testing this zone, as you see, right?
Yeah.
And for
Yeah.
the time being, these three candles are definitely
Yeah.
more or less a copy of what we had here. Do you see it?
Yeah.
What did we have
Yeah.
here? We had a
Interesting.
dragonfly doji. We had like something like a spinning top, more or less a long wicked spinning top. Today, for the time
And
being,
then boom, boom. Yeah.
today for the time being, we're getting a pin bar. So am I bearish here because we got initially rejected from here? No chance in a million. I'm actually still bullish. I'm waiting to see what's going to happen from this point on, but probably I'm going to get involved to the long side. Actually, to be absolutely honest, if it wasn't a weekend following and then Tuesday being dead, whatever, I would have already bought the retest today of this zone. The only reason I didn't do it is because the days that will follow will probably have very low liquidity. And, you know, I've been burned in the past by low liquidity. I had once established a very nice short in Euro USD. You remember that, what was it, Christmas time, that it had actually, during one of the days between Christmas and first of the year,
And New Year's. Yeah.
yeah, it had actually gone above 140 and, you know, triggered all stop losses before reversing and, you know, going to almost parity. Yeah, I was short up there actually, and I had been, you know, kicked out of my position because of a stupid move that happened in low liquidity days. So, you know, I'm going to keep a position that I have if it's comfortably in the money in low liquidity days. But, you know, I'm going to refrain from establishing one, you know, just before, for obvious reasons. I don't think anything has changed with USD yen. This is an important trend line, obviously. We got rejected yesterday, but I still see nothing bearish with this price action. On the contrary, I think that what is getting nearly fully baked are finally the Aussie and Kiwi pairs. It's not only that I like today's candle in Aussie, but I also like a scenario such as this.
Yeah. So anything that fades dollar weakness is just a reaction trade.
Yeah. So what I'm saying,
Even possibly this, right? I mean, there could be a reaction, just like the yen's against, you know, against these trend lines, but maybe this one could be. I mean, gold would tell you that there's at least a pullback coming here, right?
yes. Let me first finish with those two because it's important for me. You remember that I used to say, especially about Aussie USD, that I don't see something actionable since a long time ago. I mean, I said, you know, we said down here that it's a
Right.
good place for it to react, and I see now a 1, 2, 3, 4, 5 move up. But I don't think that this is a 5-wave move up that's bullish. The reason being is that I think that we are in a very big triangle. And if that's the case,
Okay.
it means...
People are saying your volume's still too low, Steve. The
yeah,
community,
okay.
your volumes.
I'm going to speak. Sorry, I'm very sorry. I'm going to speak louder. It's some, you know, automatic management that happens from
Okay.
GoToWebinar that sometimes gets silly. So I'm going to speak louder until you tell me that, you know, actually it has been resolved. I see a clean 5-wave up here in Aussie USD, but I think that this is just perhaps a last leg of a triangle higher. We are testing this level today. We're seeing a nice reaction, a nice rejection of it. I like the short side very much, and at the same time I see the Kiwi scenario playing out nicely. You remember what I said, that it's likely an ascending wedge. I think today we got a fresh high, even for a couple of pips, something like that. So I still like Kiwi lower as well. So I think that those two pairs, Aussie USD and Kiwi, are probably very, very close to reversing now. So we finally have something actionable here. I'm actually now short Kiwi once again. My stop loss is above 0.7380. This actually peak, so I'm really looking forward to it, and probably I'm going to get involved with Aussie USD as well. So what did you ask me before, so we can have a look at it together, Dale?
I don't remember.
Okay, so
I
let's.
don't think I asked you anything.
Okay, let's have a look to a couple of things.
It's just your volume.
Okay. Oh yeah. Okay. So let's have a look of a couple of things. Euro US.
Jack, I'm fried. You caught me. Jack is saying that I'm on the weekend already. Okay. See how the community knows our personalities. So anyway, yeah. All right, go ahead, buddy.
So by adjusting these trend lines to something like this, we can see what Blake is seeing. So he sees resistance here, and if you actually clone this trend line and you bring it down here, you're going to see the possibility of this being a channel or whatever. But what I care mostly about is not if this is a channel and if this is resistance, but for sure I can tell you as a fact that we're currently, I mean, I had this area drawn here since months and months ago, since like somewhere here. Look how many rejections this zone has provided. Yes, we had some penetrations, actually two of them, this and this, but every other time we tested that zone, we got rejected. And I really think that there is no risk reward to be long the Euro USD anymore. Probably this is a fifth wave, and you know I would very likely see some dollar strength coming in that will perhaps create something like this, a move like this, before we
back to wave 4, Steve.
Yes,
before we
can evaluate, because it's not only wave 4, but it's also an area of interest in general. So I think that it's very likely that if we see a rejection from here, then we're going to go to 111.50, and then we can evaluate the way that we're moving lower to see or determine if this move higher was a first leg of, you know, a big break higher for Euro USD, or if it's actually just another move of this.
A trip to the top of the range, yeah.
Yes, because if you look at it, I mean, we've spent 2.5 years almost, actually 2.5 years, being in a huge range, and that's what we're doing, oscillating within this huge range. So definitely, any way you look at it, and I'm one of the first that said it was on the main.
Yeah, you were bullish.
Yes.
Yeah, you're bullish a long time ago.
Yes, euro and euro pairs, but I can tell you one thing for sure.
That might be. So
yes.
This might be the last bus stop, some type of pullback here, and I don't know. Maybe it takes a month or so. You know, maybe it works it off more in time than price, but closes back over that trend line, target 123, 124 euro.
Well, the next stop is definitely 116.16, which is up here. And then, you know, we can look at the
I'm just saying range traders look at a range, and, you know, it's about a 10-cent range or more. You know, if you take the 117 high, it's a 14-cent range.
Yes.
That would get you 128.
Exactly.
So,
exactly.
but I see 124 up there is 1.618, and
exactly of this move,
maybe that's where we're going. And that would only be like from the decline, probably something like a
50% probably.
Third, halfway back or something.
So, yeah, almost halfway back, most probably. I mean, if we draw a big fib here, and actually, you know, those kind of things, it's better if you do on a weekly chart. So let's go on the weekly chart.
You're soft again.
Okay, sorry. So let's go back to the weekly chart. Actually, it's more or less drawn, if you see. Yes, so if you see from this high here, I know it's oppositely put, but the 50% is the 50% regardless. So if you see here, the 50% is at around 122, and then the 61.8 is at 126. So, you know,
Yeah.
all those are areas that can actually cause some reaction if we actually break above here. So this is the weekly view as well. So let's take it one thing at a time. Let's see if we get a break above here. If we do get a break above here, then it means that we're going to have an extension, an expansion, and you know this is going to be a very bullish event. And then yes, afterwards we're getting a lot higher. Perhaps also a retest of this trend line. So if we draw this, the extension of this that was very important back there, that also comes somewhere like above the 50%. So, you know, we have a lot of areas of interest. We also have, if you see here, Dale, the 38.2 almost coincides with this high here. So they're about at 117. So, you know, we're going to start giving people some levels that are tradable. But let's first see what kind of a reaction we get from this major area. And if you see here on the weekly, actually, one of the reasons I have drawn this area on the daily chart, and in my opinion it makes it extremely important, is because the penetrations of this zone you saw on the daily are actually not closes, not intra-week, not weekly closes on the weekly. As you see, both penetrations got retraced before the week was over. Yes. So they were.
Yes, and we're closing, pressing in on the breakout.
Exactly.
Which is an indication of strength. The others were nice rejections. There was more energy at this resistance level in the past than
yes,
the downside.
Yes.
So yeah.
So let's see.
So I guess we should hope we get a pullback here.
Very
that's
likely.
going to be a huge move.
Yeah. Very likely. So definitely, or if you wanted to, if you want to take it from the opposite side, it makes no sense establishing long positions up here. It's crazy. There's no risk reward whatsoever. You know what I mean?
Yes.
So even if we assume that we're going to see like a bullish continuation, like nobody's business. So let's assume that we're going to see something very strong, something like that. Even then, I will tell you that, okay, expect a retracement to at least retest this broken area, and then we can think about longs. You know what I mean?
Yeah, got it. If Mr. Market accommodates.
Yes, of course. But this scenario is probably a little bit more likely than a breakout and then a retest. But either way, even if we break out decisively, a pullback will be coming soon. So I believe that at worst case scenario, a retest of the current levels, but after RSI has pulled back a little bit and, you know, some selling off has happened, is still going to be a better entry than entering up here after strength. So it's better to buy this area in weakness, even if we penetrate, than buy it currently, you know, that we are showing strength that has already been prolonged. Because in essence, you know, the euro has been strong since, and this is one more example of seasonality. Look at it. When did we find the bottom in the euro USD? In the first trading day of the year. 3rd of January 2017 is the low of the year, which also has bullish implications for the euro in the longer term. I mean, it is very, very likely that this is going to be the low for the whole year as well. But that, as I said before, doesn't mean that we should be buying up here. Anyhow, enough time spent with the euro. I think it's, you know, the position here, I mean, the way I look at the market here is very clear. And if we have a look at the euro yen, we're also going to see some weakness. So perhaps, you know, some temporary weakness. So perhaps we're going to get the leg higher that we expected now, or we're going to get directly to a wave 4 from here. This is a likelihood. We might do something like that. And this might prove to be the end of 3. It is likely. We're going to see how it's going to work. But anyhow, I expect more strength in euro yen if not directly from here, from a little bit lower. Definitely, there is absolutely no reason not to be bullish the euro yen as long as 125.60 holds. There is no reason to be bearish. Absolutely no reason. Okay, so that's it with this as well. Euro pound. Friends are asking about euro pound. Let's have a look at it.
What a great call Blake made on that a few days ago.
Yes. And this is now what I'm seeing actually in euro pound. That this is likely an ending diagonal.
Yeah.
So I drew that the day before yesterday that we might have a move lower from here. That though does not exclude the possibility of seeing something like this. Let me show you.
One more run.
Yes.
One more pop.
This is also a possibility.
It would look like the EuroCAD up there if it did.
Yes, exactly.
Before it broke down.
So,
same type of formation.
Exactly.
Yeah.
So this is also a likely scenario. But let me repeat, I don't like being long at the moment. I mean, I would like to see a deeper pullback. Ideally, this would be a wonderful level, the 38.2, because it was also, you know, an area of interest here.
Where your moving averages intersect is.
And don't forget that the moving average, the more we stay above them, the more they're going to keep moving higher. So the moving average actually will come closer to the 38.2 until we get there. So, you know, it is very likely that if we do this kind of move until we get back there, it's going to be a confluence of the 38.2, of the 200 DMA, of the 50 DMA, of this zone of interest here. So that's going to be, you know, a wonderful area to look to belong again.
It's going to take the stops out of that big blue candle on the way up first in this correction. I believe.
Very likely.
You know what? People ask me, Steve, they go, Dale, how do you know where the stops are? And I go, well, why don't you just pretend you're long right now? Where would you put your stop?
Exactly.
Well, that's where they all are.
Exactly.
Okay. And I would bet anyone trailing a stop has their stop under that big blue candle right now that wants to maintain the discipline to stay long. That's where I think there's at least one stop loss order under that candle.
Also because friends have been asking the past few days about Aussie yen and Kiwi yen. Listen, I think that it's likely that we're going to see pullbacks, but seeing that we are close to a reversal for Aussie and Kiwi, but on the other hand not being convinced that the USD yen is about to reverse, I prefer to be involved with other pairs than shorting Aussie yen and Kiwi yen.
Just being short Aussie, being short Aussie and Kiwi outright rather than having the yen.
Exactly.
Which is unclear. Right.
Exactly.
Okay.
That's my point. Although having to do with Kiwi yen, I think we're very close to a pullback because you remember that we had seen this triangle and I had drawn this and I said we're going to get one more move higher and then it's likely that this push higher is going to bring us a pullback. So if I had to short one of them right here, right now for some reason, which I don't obviously have to do it, but if I had to short one of them at the moment, that would be Kiwi yen. Because we're also
asking about that'd be a nice trade actually to the downside, but I'm I'd like to ask you about Aussie Kiwi because we had that washout about a week ago, cleaned out all the longs and reversed.
Yes.
So
we did.
I'm wondering, maybe one more. It never got to your brown line. Maybe that's going to happen.
Yes, but let me give you a bearish interpretation as well, without even having done all the analysis here, all the Elliott wave analysis here, because I dislike this pair. But let's have a fast look at it. A, B, C, A, B, C, irregular correction, lower. You know what I mean?
Yeah. And it's an irregular.
Yeah, it's likely. It's very likely. So, for the time being, this kind of a price action does not necessarily mean that we turned bullish. I mean, I can easily see a bearish interpretation without even doing the analysis. And perhaps we're going to get, a little bit of a move higher if we do. perhaps test this area. We have the 200 DMA, the 50 DMA, this low, this low, this low, etc., 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 and then
Yeah.
get a rejection from there, and that's going to be
103.50 would. Yeah. To me, it looks incomplete with two drives, although I've seen that be enough. But if we got down to 103.50 or brown trend line in the coming days and
that's likely as
weeks,
well, because I had been monitoring this trend line.
And the RSI,
yeah,
and the RSI stays above 30, that would be compelling.
Yep.
So
Aussie Kiwi, I'll reiterate for one more time. Currently, the market has given us some really nice setups. I have no clue why somebody would want to be involved with this. I mean, I have nothing against it. If you like it and you make money out of it, knock yourselves out. I mean, keep making money out of it. I mean, I'm 100% with you. But on a personal level, I have no idea. I mean, it doesn't fit any of my criteria. You know what I mean?
yeah.
Okay, perfect. Kadian. A friend of ours is Catherine, actually. Catherine is asking for Kadian. And then actually I want to see, after we see Kadian, I want to show a few of, Blake has already spoken about some of the more exotic pairs, and we can have a look at them because I have some interesting views on them as well. Kadian. Kadian is currently bullish. It has broken this descending trend line. It's obviously overbought at the moment. So yes, I wouldn't be buying it here, but let me be specific. Would I be buying a move like this? Yes, I would. Also, let me show you a very interesting area, for example. There we go. You see?
Mm-hmm.
That would be lovely. A pullback, as long as we stay, I would say, roughly above 83.50, you have no reason to be bearish the CAD yen. On the short term, of course, if you go down to a 4-hour chart or a 1-hour chart and you find yourself a nice signal for a reversal, for example, let's say today that it's very likely that today we're going to get an inside day. Of course, preferably we would like to see a pullback near the end and not to close on the highs. But let's say that we see a neutral candle, which is going to be an inside day candle, and then we open up on Monday and you start seeing some weakness. Then that might signal a short-term pullback. So obviously, if you want to be short in the short term, I completely understand. But seeing at the big picture, if I want to be involved with this, I want to be long. Not from current levels, from lower. Okay?
Nice.
USD ruble. Let's have a look at it. Nothing has changed. A nice triangular formation. I think this is going to break higher before pulling back. So this keeps working nicely on our way. And keep in mind that that crude is correcting higher as we had predicted, but USD ruble is not falling. While, having to do with correlations, it should. So that for me is another indication that the pair wants to move higher. So that's another reason why I feel comfortable with a bullish bias in this pair. Also, Blake talked about USD TRY, so we can have a look at it. We had a look at it up here, and I had said that it will probably move lower, either to retest this triangle or at the worst case scenario of test this confluence of the 61.8, the possible channel, and this ascending trend line here, which actually is not drawn right. Yeah, there it is. So if we see a break, so there are two scenarios here. Now that we've moved forward in time, let's adjust. So there are two scenarios here. We either see something like this, or if we get a direct break higher from here, then we immediately move above this triangle. So this might just be a big pennant. So a close above 355, I think triggers the next leg higher. And yes, obviously carry is against you here, so you need to be careful. But if you time it correctly, if you buy a breakout, I think it's still a good trade. USD-MXN still plays out the wedge scenario. Actually, it's now coiling as well. We also see some clear RSI divergence. So I'm really liking it. I mean, a close above 1825, I'm going to be buying for sure. Or worst case scenario, 1840, let's say. I'm going to be buying because I think that after this whole move lower, a break from here will at least come to retest this area, which is at 1940. So you know, it has a long way to move to even just, you know, complete a correction, even if the move lower is to continue afterwards. So I still like USD-MXN. We don't have the trigger yet, but we're probably getting close to that. Having to do with oil, since we had a brief look at it, nothing has changed. As I told you, I would not be selling the first sign of weakness that we will see. I would probably be buying it for a retest of this area, of the 47 area. So we might turn lower from here, we might move a little bit higher, but I'm expecting to see at least an ABC. So keep looking higher in the short to medium term, and as long as we get a decent rejection from below 49, then I'm still confident that there is more downside to come. But you know, you shouldn't have been bearish here. We said so, and I think it's not the time to be bearish again at current levels, despite having seen a strong pullback. I don't think this pullback is complete, not yet at least.
Thank you, Steve. Great review. And everyone appreciates the clarity that you give.
Thank you.
I kind of...
do you have a guest today, by the way?
Do I have a what guest? No. No guest.
You do, okay.
But I think we could... go ahead.
Yeah, we can wrap it up if you want. Somebody asked about pound yen. I said yesterday, actually,
go. I'm sorry.
When we were at the highs, I said yesterday that I would like to see a retest for a fifth wave up. You see, 1, 2, 3, 4, 5. We already got that pullback yesterday. Do I think it's complete? Most probably not. So you might see some triangle forming. It's very likely. So if we go to a 4-hour chart, you might get a triangle. But I think that you should not be short the pound yen yet, because I think I'm actually pretty confident that there is at least one more bullish leg higher before we can even discuss the possibility of a pullback. So I know you're seeing some weakness today, but even when we were at the highs yesterday, I warned you that any pullback should not be taken as a complete reversal, and I stand with you know, I stand to that opinion today as well.
Okay, buddy. We have a harasser in the room.
Yeah.
Anyway. Yeah, I know. Anyway, I just wanted to show the VIX chart because it's summer, and you want to show the VIX chart? You pull it up.
Sure thing.
You know, we had that spike up to intraday spike up to 15.
Oh, let me actually pull the VIX here. Great.
And it's summer, and we all go to the beach, right? We all go to the beach. All right.
You see
so,
another retest, by the way, of this trend line.
Yeah, isn't that amazing how? Yeah. Okay, we have record short VIX positions, record shorts. They're defending their short positions. They certainly were successful yesterday. But my contention is that the VIX is like, you ever been in the water, Steve, with a beach ball in your hand and you push it underwater?
Come on, I'm Greek. What
you
do
know,
you
it's filled with air. Yeah, okay, you know, so I mean, it's a beach ball trade.
The Greek coastline is like, you know, thousands of kilometers long. Yeah, so we are, you know, we're one with the sea.
So, you know, everyone's the VIX is a beach ball trade. Okay, because they're trying to cream it, they're defending their position, and if we ever take out yesterday's high in the VIX on a closing basis, they'll their next defense would be of course, 16's obvious, but I would think up in the low 20s.
Yes,
So
definitely.
it's a reversal week, just like the S&Ps are, even though they're steady today. And this is a beach ball that I don't think will be able to be held underwater throughout the summer.
Keep in
And
mind
the
that
longer and the further you push something under the water.
keep in mind that if we want to do some
And this is,
candlestick analysis, this candle that we
yeah,
got on
so,
the, this candle that
anyway,
we got.
markets top in violence and they bottom in silence. And if you look at a longer-term VIX chart, it doesn't get much more silent than that. It's like a EKG of someone in a coma outside of a few spikes.
Indeed. So keep in mind,
Okay,
even if we want to do some candlestick analysis, this candle that we got on the 9th of June was an outside white candle. It was also a bullish engulfing of the previous one. Its low was an 11-year low. So that intraday low was an 11-year low. And since then, after we got that volatile candle, as you see, we haven't broken lower. So we haven't broken below this low. So this candle might be a warning, yesterday's candle as well, obviously, that volatility might actually be about to start picking up. So as you said initially, I think that people should be careful because it's not at all a certainty that we're going to see a calm market during the summer months of July and August.
Yeah. That's a nice, again, a lot of falling wedges. This this too is a falling wedge.
Indeed it is. Indeed it is. And if we see some big break like this, that's going to be extremely bearish for stocks and extremely bullish for VIX, because look at it, we are coiling since the summer of 2015. So it's a 2-year move. It's a 2-year descending wedge in VIX, because if you want to draw it as a wedge, you can also draw it like this, as you see. It's a perfect wedge. You see it?
Yeah. So it implies at least 35, but then I look at the spike in October of 2014. This is actually when I had a surgery.
Here.
I was in the hospital when that was the Ebola scare. Okay, then you had the 55. Then you had the 55 spike. That was the Chinese yuan devaluation scare in August of 15.
I remember I was in Naxos actually vacationing.
Yeah, the Dow opened 1,000 lower. They couldn't even open the VIX. So there's two drives. So, you know, if I want to give my most bullish view of the VIX, there's another drive coming. And you could even count all the way back to that drive you were showing before.
Yeah, but...
And the RSI,
Yeah, and if you see, this is like a bigger version of what we had there, which actually broke out and created this. So if this kind of coiling created this, let's see what this kind of coiling is going to create, because it might create something way more spectacular. I mean, this was, to be honest, very spectacular, but it didn't last long. So perhaps a break above, a decisive break above this wedge will create something that's more long-lasting than this was.
Yeah. At least, I think at least until, well, I heard that wave 2, or I don't know, maybe it was wave 4, it took about 8 to 10 weeks. This was actually Peter Temple, who thinks we topped, you know, around the solstice. So he was thinking around time-wise, the same type of time frame. That would take, you know, 10 weeks from mid-June, takes us July, early September. So for this correction. And looking for your level around 2280, 2260, and then another high.
By the way, yesterday's candle touched exactly this zone of interest that we had here, and before rebounding. So it is more than obvious, if you see how the stock indexes are trading on weakness, it is very obvious that the market is very full of buying orders. I mean, every
Yeah.
level that you would expect bids to reside, you actually see that they do, which means that the market, and we can totally understand why, the market is still very tilted to the bullish side, very tilted, because
Yeah, they'll buy breaks all the way down.
yes, they will.
All the way
They
down.
will
They'll
actually.
buy breaks.
There's no question that they will keep buying breaks. So, for example, we saw that as expected, there were buying orders here. If this zone gives way and we go to the next one, you'll see that the same thing will apply there. So initially,
Yeah.
it's like, you know, being short at the moment, the SPX, for example, is like, have you seen those, have you seen The Outcast with Tom Hanks, that in this kind of, that in this kind of islands, you know, that have a very shallow sea, you know, near the coastline, initially you have, you know, for like 100 meters, you have very high waves, but if you get past through them, then actually it's some easy swimming or easy canoeing or whatever you're going to do. So think about, you know, the SPX with all the bullish mood that's out there like this. I mean, there are some high waves that the bearish pressure has to penetrate through in order to get to calm waters. But if actually we see a strong enough move that will penetrate the first waves of buying orders, then the buyers are going to get panicked. And then you're going to see that the move lower is going to accelerate and it's going to become, you know, much easier for the bears than it will be initially. So, you know, the secret
it
is...
always is that way.
Yeah, so the secret is...
It takes time to turn a battleship around.
Exactly. So the question is, will we see an initial selling move that will have the momentum to go through this initial wave of buying orders? If yes, then you can expect a much deeper retracement.
Okay. Well, thank you, Steve, for another great week of analysis. My friend, have a great weekend.
Hey, Nick.
I want to thank
Hi, Dale.
Brooke.
Can you hear me?
Yes, we
Oh,
can.
Nick wants to. Hi, Nick.
I've been saying,
Oh.
I thought my mic, I don't think my mic's working. I've been trying
Yeah.
to...
We just had you
Hi,
for the
how
first
are you,
time.
Nick?
Good, thanks. Good. Can
How
you
are
hear me
you?
okay?
Yeah. Yeah, you want to
Great.
show a few things?
No, I just wondered, did I missed the first part and I missed Blake. Did Blake talk about the South African Rand?
No, he
Yeah,
didn't.
I think
You
he
want to have
did.
a look at it?
He did, yeah. Okay, cool.
He did?
I think he did.
I think he just
USD ZAR?
mentioned it, but I don't
Because he
think...
mentioned his friend that's from South Africa, one of his trading buddies, and I think he showed the Rand.
Oh, okay, my
But do
mistake.
you have something you want to show the Rand?
No,
Nick?
just saying, I'm sure they're looking at the same, so no, it's all good. Like, I just wondered, just like to say hi, see how's everyone doing?
Cool. Well,
I hate
we're
month end, it's so funky, the moves on the last day of the month. I think we're doing some really funky stuff until at least Wednesday, and I don't know, it might be pretty thin and crispy on Monday too. So.
Yeah, it will be. You know, I was on the freeway here in California. Everyone started their vacation yesterday.
Nick, by the way, we need to congratulate Nick. I mean, probably she bottom ticked the USD yen in that pattern in place she had created. Like she bought a low, and she actually caught the high for 2 pips yesterday, which was like, you know, she traded that to perfection. I mean, you can't get closer than that.
Yeah, clean it up, Nick.
I got lucky.
Completely. She left nothing on the table. Nothing.
Yeah. Way to go.
That's
Nick's,
just Fibonacci.
You're the diamond. No doubt about it.
Nick, by the way, since we just had a conversation about stocks, from Harmonic's perspective.
I can show you the fib track if you like.
Yes, let me give you the screen. There you go. I would really like to see what you see.
Can you see a chart?
Yes.
What can you see?
No. We can see your Twitter.
Oh, okay. I need to change the screen. Okay. Sorry. Sorry. Oh, come on. monitor 1.
Okay, now you're obviously changing screen because, okay, now we can see a chart, yes. The
Okay,
dollar
so
yen one.
Yeah, so this is the dollar yen. So in this one, like I knew I wanted to buy it here, and it was a perfect retracement from the 886. I'm just going to make these really dark so you can see them. And hide my CCI because we don't need that. Okay, so this was a retracement to the 886, and when you bounce off the 886, you can pretty much set course for the 23.6. And it's really funny because when I put this on and I measured it and I put the pip on, I hadn't quite got my fib thing on the wrong place, so I had like the exit at 90 or 92 or something. And then I realized that when I put the fib on correctly, that actually, you know, I put my exit for, you know, 0.2 of a pip above where it was going to go, and I was really panicked it wasn't going to get hit. So anyway, that's just the fib rule. So this is the 886 retracement, goes to the 23.6 retracement.
It couldn't get more perfect than that, even if you tried.
And if that works on every scale. Like if you draw, for example, the oil moves, the swings, the lows, you know, it's done exactly that move in oil as well. So it's quite cool when it works. So 886, 23.6. And the 786 always goes back to the 38.2. There, fib trick for you.
So they're mostly mirroring each other, having to do with their distance from the 50 fib, right? If you get an 8...
Yeah, I think, yeah, exactly. Yeah. Maybe, exactly. It's like probably reverting to mean, but yeah, just like that little rule. So, you know, for me, like I look at it and I go, what if this is just an ABC? And then when I put this on, and I said, where's the 61.8 when I was trying to see where it goes? And so it's either going to go to the 61.8 of this swing, or it's going to make a big ABC. And so because the 61.8 lined up with the 23.6, I kind of, that's how I picked that target.
Okay, yeah. The question is the following. What is your medium-term view with it, though? Is it bullish? I mean, regardless from the fact that we got rejected yesterday and we saw some pullback.
Yeah, so I'm going to look and see what happens at the 50. And this pivot, there's a pivot in the middle, and I'm going to buy it. I'm actually using the moving averages are working really nicely on this as well at the moment. And I'm going to use, as for now, like I don't really, I'm kind of neutral. It could make a big wedge and then another leg lower, couldn't it? So, because we've done 61.8 of this rally on this leg. So, you know, technically we've done enough, could make another leg lower. So I'm a bit more cautious, whereas I've been like really bullish before. And I'd like to be really bullish. I'd like to see, because this looks so impulsive to me. But
yeah, especially considering the pre higher before we started correcting and consolidating lower. I mean, I'm also tilted to the bullish side. I mean, I haven't bought it, but I was very bullish the euro yen. I mean, euro yen, if you see it, technically it's as clean as possible, at least from an Elliott wave perspective. The pound yen as well. So being constructive, so many yen percent seeing the previous move here that we got like from September 2016 up to, you know, the high near the end of the year. I really think that the chances are of another move higher. At least it's, you know, more likely than the opposite.
Yeah, exactly. Like when I look at the 200 moving averages as 200 week moving average, you know, this guy's the boss. And we, you know, when sometimes we'll have a sort of oscillate around it, and that we're doing exactly the same on the daily with this 200 moving average as well. You know, we could go either way really. It's flattening out. So I'm kind of more neutral. I was really sure of this, but now I'm, you know, I'm going to wait and see what happens back around the 50% retracement and the 200 moving average are right in the same place around 111.25. I'm going to wait and see what happens there.
Under there, it could look ugly if we get a big risk off this summer, don't you think, Nick?
It definitely could, but back above above 112.90, you know, then we're going higher.
Right.
The question is, what do you see with stocks? Because, you know, things you know, have started to look like, you know, we might actually see another summer sell-off. But what does your analysis
I
say
see,
about
honestly, proper month-end trickery here, and really, it's done an ABC. Like we could, for me, like I think we could see another leg higher, but for me, it's got to get above this level here. So if it gets back above 24.28 in the ES and takes out this morning's high, we're going to go much higher. And if we take out this red line, we're going to much lower. If you put a gun to my head, I'd probably be a buyer, not a seller, just because of the sentiment after yesterday, and just because these tops take time. So.
And
really, we've been kind of distributing since March when we first tagged 2400.
Yeah, we really haven't. The whole of the month of June has just been sideways. So.
Yeah, in May, you know, I mean, really, if you look at it, you know, 2400, if you go back a ways, you know, that could be.
For me, I really do feel that we have unfinished business, like.
To the upside.
Just, levels just not quite tagged to the upside. So say we see a sell-off here, I still think that if that happens, I still think we'll start next month on a new high and then sell off. Just
okay, that's
enough to get everybody bullish and happy once again, you mean?
Yeah.
And then take them to.
Yeah, whereas the DAX, you know, for me, this was a major bull bear line, and just like I'd like to see where we close today. We need probably a really good rally in US stocks to save this one back again, but
yeah, that looks pretty ugly.
I'm just going to clean up this. But
my next target on DAX, I showed it yesterday actually, Nick, after we got the break of an ascending wedge I was looking at. My next target for the DAX is actually 12,100. There is an area of interest there. So I'm looking at that level for a possible support after penetrating through 12,400. So, you know, I was looking at 12,400 as a bull bear line, exactly as you mentioned, and I'm also looking at 12,100. If you see, there is also a wedge interpretation, but you need to go to a longer term chart. But yes, actually the channel you're seeing in the short term is also a possibility.
FTSE
is more bearish, but that's because the pound has been so strong.
Right.
So, you know.
FTSE's leading it, I think.
Yeah, the FTSE is.
But it's close with the DAX. But
you know, the FTSE, this is the 2015 highs, 2016 highs. I think it's, you know, and these lows. I think that in the FTSE, this kind of level around sort of 71.30 is a really no-brainer to come back to.
Yes, definitely. And if you see, Nick, exactly at the area you're looking at the moment, what you have in the chart, you can also draw an ascending wedge, which we actually broke yesterday.
On the FTSE?
Yes. Yes, perfect. No, actually, sorry, from the week low of last June.
Okay. Of course, yeah, hold on. From last.
Yeah, if you take that week, yes, that lower week, yes.
Sorry, I've got right leg, right. Yeah, I see that one too. Yeah. Yeah, we've broken that one. So I think for sure we're coming back to this line and this level.
And now
if you take
the blue trend line and you connect the 2017 first high with the other two highs, you're going to see the wedge I was talking about. So if you now connect on the top side the three last highs, yes, exactly. No, the last three.
Yeah.
Yes. Yes. So this is also
that false break, third touch false break. So it's a really good signal for me.
Yeah.
I would say third.
Looks
false
like
break,
Wile E.
third
Coyote
trend
standing on
lines.
the ledge.
Yeah, false break, third touch is a trend line is like one of my favorite trade setups. So
Yeah.
cool.
Yeah. So we got a little bit of some shifts.
I actually have to say, if you're going to take it from these highs and not here, then I think you need to take it from these lows.
Okay, makes
And
sense.
for me, in that case, it's kind of
We
we're
held.
on it, you know.
Held where we had
for
to.
me.
Just to keep people long for the weekend.
Yeah, exactly.
Maybe, you know, they do that sometimes, you know, make people feel, you know, big deal. It's a little pullback to support.
But yeah, for me, this kind of level here is like no magnet, no brainer. So does anybody
Cool,
want
guys.
to look at a thing while I'm here?
Anybody has a question for Nick before we
Nasty
close?
false breakdown in euro sterling today, wasn't there? Everybody was watching this. I know
Yeah.
lots of people were watching this, and they wanted to.
Shorted. Yeah.
They drew it. Yeah, they drew it like this, and they went. Yeah.
Yeah.
And they went, oh look, it's broken.
I think, Nick, we talked
False
about
break.
it before. I don't know if you saw it. I
No,
think
I
that
missed
it's
it, sorry.
likely that Euro Pound is currently at an ending diagonal. So we discussed with Dale the possibility of one more high before actually correcting lower.
Guess what kind of formation it would be, Nick, if we got one more high?
If we've got one more high, I'm not at all bearish.
Okay.
But I can see here, I can see 5 complete
Exactly.
waves. And
Exactly.
so I can see, like, for me, I'm not bullish.
But do you see 1, 2, 3, and 5th wave, perhaps an ending diagonal?
I've got my Heikenashis on, hold on. I just clear on the Heikenashis, I'll leave it. Sorry, do I see one? So I see 5 waves up?
Yes.
Sorry, so what was your question?
Look, from the April low, 1,
Yeah.
2, 3, and the 5th wave being an ending diagonal.
Yeah, I can see that. Yeah, I definitely can see that, you know. And it's 61.8 of wave 1. So, yeah, it's like, oh, we could go lower from here. But like if you, there's this thing called the 20 moving average, and it's
which works perfectly. Yeah.
Nice. Under today's low. Yeah.
Yeah, it's just not letting it happen.
I think they're keeping people long for the weekend. Here too, maybe. Nick, has this strengthened cable changed your view at all? Has it changed the picture?
No, it doesn't, because oh, you mean, no, I'm about to have the biggest dollar holler people ever heard. I'm getting ready to get really bullish the dollar.
Yeah,
sorry.
That's actually good timing, because a friend here is asking, hi Nick, what is your forecast of US dollar index? That's John Woo.
I'm really getting ready to be, okay, John, I'm really getting ready to be bullish the US dollar. I'm gonna just, you know, I know everybody's endlessly talked about the euro dollar, but it's at these trend line resistance. It's a back pattern. I'm looking for reverse price action. We haven't had any yet, and at these kind of things, you know, you see a lot of trickery. So we could trick everybody short today and then make new highs starting next week in the really thin holiday liquidity and kill all the shorts, and then everybody will pile in long because they go, look, we've broken this trend line. This is what
major trend line breakout, 123 next target.
Exactly. Third touch is the trend line. Just
DSI at 93 is not
the trend line, and then come back. So it's going to happen. So, but for me, like the dollar index is right at that kind of place where, yeah, it's do or die. To be honest, if we go any lower in the dollar index without bouncing, then I'm going to say, yeah, we've got much lower to go in the US dollar. So
what is
I'm
the level
back on my dollar holler, but I've got it ready.
What is the level in DXY you're looking for a possible reversal?
I just changed my dollar yen. Hold on, let's see if I can get my DXY back. had it here. I have it here. Okay.
Would we like people to go to our Facebook page and like us now that
Yes.
we're broadcasting there? So guys, go to our Facebook page and like us if you do. If you don't, you don't have to. Only if you do. We don't want any fake likes like fake news, you know what I mean?
So it's the 23.6 moving average Fibonacci retracement from these lows. For me, that's like really important Fibonacci trend support and resistance. And I don't want to close. If we close the month below it, I'm officially a dollar bear. And I think that not only that, but we'll keep going to that level's resistance. There's record shorts in the euro dollar, and the euro dollar is 57% of this DXY. Like, so I'd be surprised, but, you know, not astonished. So that's why here, plus if we do this and we say this, you know, this swing higher, if this was wave 1 and 2, 3, 4, 5, you know, this wave 5 was 61.8 of wave 1, so we could see a bigger correction. You know, if we break the 38, we're coming back to the 38.2, which is
a lot lower.
91.17.
92.
Yeah, so that's month. So these, remember, like we're looking back to the 2008 low, but that's what I'm looking at, yeah, in there. So that's why I think it might be complete. But yeah, still, this is a really big bull bear line for me. And if we close back above it, then I would say that this, maybe this wave 5 isn't complete. But you never know.
We'll know soon.
Exactly. Yeah. So
So
just
we're at
because
this important inflection point in many instruments.
But you know, the dollar index because it's a conglomeration, like not many people like trade the dollar index as the dollar index. So I'm just going to show you. So the 23, when I was looking at it, the 23.6 on it is messy. Sometimes it will go through a little bit and come back. So that's yeah, I'm just going to wait and see where we are next week, just because I've got harmonic pattern, reversal patterns in the euro dollar, in the Aussie dollar, in the Kiwi. I've got the
Oh, you also have reversals
really
for Aussie and
deal
Kiwi.
support, you know. So here's the dollar Canadian. For me, I realize my view is a little bit different. If you put a mirror trend line in the dollar Canadian, here we are on the mirror trend line low. So this 130 level, these lows, you know, the CAD loves to spike through levels and come back. Like it's a real beast for doing that. And so this is what I'm watching in the dollar Canadian. So it's a maybe, you know, I don't know. The problem is that is the length of this wave here. So that was shorter than wave 1. So let's see. Wave 3 can't be the shortest, so, and at the moment it is. So that says to me that this is probably going a lot lower, and I'm wrong, and that the dollar has broken that support. Yeah.
Bunch of 1-2s, 1-2s,
Yeah,
which is kind
perhaps
of
this is an extended wave 3. So if that's an extended wave 3, then it is 1, 2. The first bear flag is the 2.
Yeah.
Then we have 1, 2 of wave 3. Now we're in 3 of 3. Then we should expect a wave 4 of 3, and then the wave 5 of 3, a bigger retracement, which is going to be the wave 4 of the whole move lower, and then the last wave 5.
Right. So the dollar Canadian, and for me, like the dollar Canadian is quite a canary in the coal mine. I really would like to see, you know, a close back above this 130. If I'm wrong, I'd like to see the sort of month close back above this 130 line. I can't get rid of this. So these lows, you know, I'd like to see the week and the month back above here, but that would mean quite a big rally today, so I don't know if we'll see it or not. Yeah, so that's my, the Canadian does look quite bearish now, doesn't it?
It does.
Always darkest before the dawn though, right?
It does, but I think
They
that
always
it's
look the
overdue
worst
for
at the bottom and the best at the tops.
Exactly. So I just wondered, so if there's nothing else anybody wants to look at, I haven't really got anything screaming to trade me. I did like the South African rand, though. So, I'm trying to think if there's anything else. These bonds, you know, have properly rolled over for me. I don't know about anyone else. This is the US 10-year.
I'm 100% with you, and I can tell you the fact that
And so, you know, that's hard to be
Greg
bullish stocks, isn't
also
it?
agrees. His analysis also says the same.
So get rid of that, get rid of that. So this 200-day moving average, you know, in the bund, the 10-year, we had a little flirt above it, and back we go. And if I go to a weekly...
Actually, Nick, you had made a perfect pattern in place short in the bund, and you got stopped out from that spike, because that would have been like a perfect top pick.
It was perfect, yeah,
it was perfect.
So the reason that I was very bearish bonds is, so this is my weekly view. So you can see for me this was a drop, a consolidation, wave 2, bear flag, call it what you like. And this is the 200-week moving average, and this is the breakdown level. So we rallied, we've come back, we've tested the breakdown level, the 200-week moving average, and we're getting rejected. Well, the last time we got rejected at the 200-week moving average, this happened. So, and it is quite a big deal. Like, it does respect it. You know, you can see back here what happens. So when it goes sideways, we go consolidate, and I think that this is the next leg lower. So if all we do from this high is make an A, B, C, D, then that takes us to 120.30 from here, and we're at 125.24. So still got a way to go. That would be the 113. Yeah, so we've still got a long way to go. So that was why I was bearish to the bonds.
Yeah, those targets are all the way back in years. So
yeah.
Okay, coach. I think it's time we call it a week. Okay. What do you say?
Amen.
Okay, perfect.
I called it a week yesterday. Anyway, thanks for dropping in, Nicola Duke.
Yeah, as always.
Steve Bolge. You have a great weekend, Steve.
Everybody, enjoy.
Celios is out having a second honeymoon. Blake's heading up to the mountains. Steve stayed inside the air conditioning. Greg is on the beach. Nick and I are...
We're going to sleep. We're going to catch up and sleep.
We're going to recharge our batteries. And thank you, Faith. And anyone that hasn't, subscribe before you go away. And I'll see everyone Monday. Remember, we really enjoy working with everyone. I want to thank our subscribers for showing their appreciation for our efforts. And this is 3 months in the book for Face, and let's kill them in July. What do you say, guys?
Woohoo!
Okay.
Good luck next month, everyone.
Right. Have a great weekend, everyone. Enjoy your summer. We're going to have a great July. I have a great lineup of guests and everything for the month of July. So don't buy into, oh, it's going to be a slow summer. With what I just saw from Nick, it's not going to be a slow summer. There'll be plenty of opportunity. So have a great weekend. Don't just count your pips, count your blessings. And see everyone on Monday. Enjoy.